Okay, good morning, folks. Good morning. I'm sorry about the delay there. I've got 4 clocks up here, and for some reason they all seem to stall. Maybe the batteries have gone. Morning, all. Hopefully, you all had a good weekend and fighting fit to start another week. Welcome to you all here. Hopefully, here at the Trade Zone. You're all ready for the week ahead. So, as you know, if you have not seen us already, we're doing this every Monday and Wednesday through the course of the year. I'm the guest speaker, courtesy of Eightcap for the month of February. Delighted to be here. Next month, you'll be graced with someone else. Not quite sure who it is yet. But basically, yeah, we're going to come in on a Monday and a Wednesday, basically looking at how I view the markets, looking at potential trade setups. But normally on a Monday, we'll look at the week ahead. That's why I build it here as the week ahead. We basically look at that, at what's going on in the markets, so you can sort of focus your attention. These sessions basically work best when you interact as well. So if I can start off by asking you, maybe just in the chat here, let me know your name, where you're from, and of course the level of experience you're at as well, because I want to make sure that we're pitching these at the right level and that we're not going above too many people's heads, or I'm not going in too basic. So it'd be great if you can interact. Let me know exactly your name, address, and not address, but place in the world, and your level of experience. Okay, so this week we've got quite a busy week out in terms of inflation sort of driven data out of the US. You know that the main currency on the planet is the US dollar, and of course what happens to the US dollar has ramifications across all the different currencies. So the US dollar's got quite a busy week in terms of inflation data driven. So we'll go through that and have a look at that. Also, there's other stuff going on as well in other parts of the world, not least Australia and Japan as well. So we'll have a quick review of that. So we're basically looking at the Forex indices. If you want me to look at cryptos as well, we can do that. Anything that you want me to look at, drop it in the chat there, and no doubt we'll get to it as well in the short time that we have with you, maybe 30, 40 minutes or something like that. Okay, so I want to start off by talking about the week ahead. Now, for those of you that may be new to this, we did discuss it last week. This is a great new place that you can basically get your week ahead planning sorted out. It's the Eightcap economic calendar. Okay, so you log into your Eightcap portal. I've logged into mine here, clearly. Log into Eightcap portal, and then you can see the economic calendar, and it pulls up this here. Now, this is a really interactive. There's lots of places you can get your economic calendar, but I've been looking at this now for a week and a half or so. Really impressed with what it's got, because it doesn't just give you the announcement and the expectation. It actually gives you a bit of information behind it as well, which it really is a great place to start your week. And of course, you can scroll through the different days as well. You see here, I'm on Monday, you've got Tuesday, Wednesday, Thursday, Friday. So I don't know what your weekends are like, but doing this ahead of the trading week normally is, I think, the preferred way of doing it. So just maybe spending an hour on a Sunday night before the market's opening, of course, depending on where you are in the world, sort of mapping out the weekend. Now, even if you're not trading the fundamentals, and I know a lot of you don't, and I'm not particularly a fundamental trader, I think it's really important that you know what the fundamentals are that's driving these markets. As I say, even if you're not trading them, to keep you out of trouble, you don't want to be taking trades ahead of a big sort of announcement like a CPI or rate decision. So being aware of what's going on, I think, is very important. So Monday today is quite a quiet day today. We've got a couple of Fed speakers coming out here. You'll see you've got medium impact or low impact news. You can just scroll through the green ones tend to be not so important. You just had you've had Switzerland inflation numbers come out year on year at 3.3. It's quite high inflation data out of Swiss. But you can scroll through just by clicking to the right of the screen. Anything in high impact news would be deemed in red. So we'll just have a quick scan through that. As I say, not very much going on really today or Monday, fundamentally wise. Tuesday is when it all sort of starts off. Okay, so again, I'm just going to scroll through this. You can do this in your own time. I'm not going to go through each news, otherwise we'll just obviously take up the whole time looking at that. But you can do that in your own time. I do want to talk about a couple of things that are coming out in the on the economic calendar. And of course, it's going to be the CPI data out of the US. Okay, so CPI out of the US is going to be a high impact news event. You can see it's high impact. It's the US. It's CPI. It's what drives our market. It's what drives the currency markets. It's basically inflation, which is CPI. Inflation basically affects what the Fed do to interest rates, which affects what happens to the currency. It's as simple as that. If the currency, so if interest rates are rising, then of course the currency should follow as well. Because if you want to get a return on your money and you like what's going on in a high interest rate environment, of course you need to buy that currency to invest in that higher interest rate environment. Simple as that. Basic economics. And the Fed moved their interest rates on their CPI expectations. Now, anyone that's been following CPI in the US, you'll know that CPI basically has been on a rise, on a tear higher over the last year or so, as it has been through the developed world. CPI hit a record of 9.2% in June of last year. Since then, we have been trading lower. This estimate is coming in at 5.5%. I've seen this is the lowest I've seen, and this is basically what Eightcap do here. They take the feeds from all the different analysts and sort of give it an average of them. So the average, they're going from 5.5. I've seen some highs up as 6.2% as well. So 5.5 is quite a move down. If you scroll down to the bottom, you can see here as well what the read has been doing over the last period of look back. So it's great. You can sort of like scroll down and look what's going on there as well. So we're going 5.5, which has dropped down to 5.7. This is, by the way, this is core CPI. The CPI is 6.2%, previous down from 6.5. So that's basically come down from, that basically has come down from this, sorry, beg your pardon, from about 9.2%. So markets are expecting this to continue. If this market comes in bigger than expected, greater than expected, maybe up there at 6.3 or something like that, you can expect the dollar to remain bid, as market participants are expecting rates to stay higher for longer in the US. If this comes in around, and I'm looking at this, this CPI here, that comes in at 6% or lower, you can expect the US dollar to have a negative week. It's as simple as that. Anything lower than 6% or lower, the dollar is going to be sold off. So keep an eye on that one. Markets really tend to focus on this one, and then they look at the core CPI afterwards, which takes out food and energy. So we'll keep an eye on that on Tuesday. Very, very important. And then there's not a lot until rest of Tuesday. Then we've got Wednesday. Basically, we've got some more inflation data out of the US. We've got retail sales. Again, go through this. You can pull up Wednesday. Here it is. Putting up Wednesday here. So you've got we've got retail sales out. We've got trade balance as well out. Retail sales is a big number in the US. Why is it a big number? Well, because it basically tells us what people are doing on the high street. Are they spending more money? Clearly, if they're spending more money, then inflation has upward pressure as well. So we like to look at retail sales. It's like the first, almost, well, maybe the second in the chain of what leads to CPI. I like to look at employment the most, of course. And you know what happened to employment in the US last time out, 517,000 jobs added. So very tight labor market in the US. Are they spending money? Well, this number here will tell you if they are spending money. And if it comes in better than expected, you can expect, again, the US dollar to be supported. Anything lower than what's expected, you can expect the dollar to come under pressure. So that's Wednesday. We've also got some data out on Thursday. Okay, so some big data out on Thursday where we've got PPI as well. So lots of inflation data driving the US. And I say whatever happens to the US tends to have ramifications to the rest of the the currency markets. But also on Thursday, we have what I've flagged here as quite an important event. It's basically the Australian employment data. Okay, Australian employment data, very, very important. Why is it important? Because it basically tells us, how much of the workforce or how much of the population are working. If more people are working, what does it mean? It means they're spending more money, and if they're spending more money, what happens to inflation? Inflation goes up. So unemployment in the Australia at the moment is running at basically at 50-year lows. I mean, it's a really, really tight labour market. And if you looked at what happened in the CPI, this Consumer Price Index, last time out in Australia, up there at 7.8%. The RBA, they moved their interest rates last week by 50 basis points and were quite hawkish in terms of there would be more hikes to come. So we're seeing basically upward pressure on the Australian currency. So keep an eye on the Australian employment later on in the week. It's going to be a big event. Certainly, if you're trading those risk on currencies, generally the high beta, the commodity currencies are the risk on currencies. And later on on Thursday, we've got again inflation data, as I say, PPI, producer prices index. It's what the producers pay for their raw materials, basically. If these prices are going up, it basically means that they've got to push those prices to the consumer. That's you and I. Again, it's inflation. So lots of inflation data out of the US. Also, while I'm on this calendar, and I wonder if it's here. It is here. Good. It's here. Yep. RBA Governor Lowe is speaking. Now he's going to be speaking after the release of the data, after the release of the employment data. So getting his take on where he thinks the rates will be going. So, well, you have the announcement made on the jobs. What he says afterwards is going to be equally important. So you need to be paying attention to that. It's at 10:30 London time, because I'm based here in London, UK. Wherever you are in the world, it will obviously go to your own particular time zone. So 10:30. If you're going to be up 10:30 in the UK at night watching the markets, good for you. But if you're not, make sure that you close out, or you are wary of that if you've got Australian dollar currency trades on. Friday is quite a tight, a dull day in terms of the fundamentals. So basically Tuesday and Wednesday and Thursday is when it all kicks off. Go to your Eightcap portal and see what it is all about. Okay, something that's not necessarily on that calendar, and it wouldn't be because it wasn't scheduled, but it happened over the weekend, and that's basically something that's happening out in Japan. Now you can see here on my momentum meter, this is the tool that I use. I'm not a big fan of lots of different technical indicators, but I do use this. I had it coded up about, I had this one coded on TradingView only a couple of years ago, but I had the MT4 version coded for me, almost 2007, when you could hardly find an MT4 coder, but had it coded for me nonetheless. It's my backbone of how I trade the markets. It basically shows me where the money is flowing at the moment. I don't know how anyone can trade the currency markets without looking at something like this. But what it shows you here this is the hourly chart, but if you go down to the 4-hour chart, you can switch the time zones out as well. This line down here, yeah, see it? I'm moving my crosshairs down. This is the Japanese yen. Okay, so there's been developments over the weekend. The current governor of Japan Central Bank, Kudo, he's giving up the post next in April, actually. And there is obviously a battle now for his successor. And this guy came out of the nowhere last week. Ueda, I think his name is. He was in the Bank of Japan sort of panel 10 years ago or something like that, but he's pretty much unheard of. And all the analysts were trying to scramble around to find out anything that he said in the last 10, 15 years. And he seemed to be quite hawkish, basically, upward pressure on interest rates. And over the weekend, he was basically on the wires reasonably dovish. Well, to say reasonably dovish, very dovish. He was basically saying that the current ultra easy policy that we're having in Japan, which is keeping the Japanese yen rates low and the Japanese currency low, that is appropriate. So that's really taken the markets by surprise. So the Japanese yen has been smacked, it's been sold, and I think the bias for that for this week is likely to continue. Just while I'm on this momentum meter, you'll see that the strong currency at the moment on the 4-hour chart, I like to use the 4-hour chart, is basically the greenback here, the green line, the US dollar. So the US dollar is one of the strongest currencies. You're also seeing some strength coming into these commodity currencies. You've got the Canadian dollars looking strong. You should be taking notes on this on your pad to keep an eye on these, unless you have this on your screen. So Canadian dollar, New Zealand dollar, and Australian dollar are all looking quite strong. Well, they're all taking basically the benefit of the weaker Japanese yen. But I'm looking in particular at the dollar against the Japanese yen. Okay, so the dollar against the Japanese yen. We did speak about it last week in terms of the more sort of dovish expected central banker. But here you see we've broken through this level of, well, I think you consider it, this is the daily chart now, broken through the level of resistance, which would have come in around this level in here. Okay, I've actually had it drawn in, but basically this level in here, it's where we, it's where we bounced off it on this little rally. It's where we found this support on the way down. It's a level of significance. On Friday, you'll see this bullish pin bar. Now, I love to trade these bullish pin bars, bearish pin bars at key levels of support and resistance. It's a back-to-back bullish pin bar. So technically and fundamentally, this currency pair has everything going for it to trade to the upside. Okay, you've got higher highs on the pin bars. You've broken through the level of, or touched into the level of old resistance, which normally acts as support. I hate using that word normally when it comes to trading, but generally speaking, old resistance acts as support. We've put in a higher high straight out of the gate this morning. We've come back in now to retest last week's high. If we break last week's high, markets will be undoubtedly looking at 134.50 as the next level of resistance. I just draw down to the 4-hour chart now, and you can see exactly what I'm looking at. Okay, so we've got this next level of resistance where we had this stalling of the downtrend around 34, sort of 30 to 50, bounced off there, back up to 38, and then came through. So once it broke through back on beginning of January up to retest, it's a big level. I think this chart will tell you that it is a big level. So if we can clear last week's high, which came in at around the 132.75, you know, the path of least resistance will be to 134.50. If you have stops below that swing low, you get a positive risk to reward ratio. Trade for the week most probably has the correct bias. I'm trying to think what can derail this on a fundamental basis. Well, the only thing that can derail it really is tomorrow's CPI out of the US. If the CPI comes in around 6% tomorrow, this is the year-on-year CPI, not the core CPI. But if it comes in at 6%, that's the only thing this week I think that can derail that move, that grind higher to 134.50. You know, the writings on you know, is out there from Bank of Japan. He's hawkish. He's staying that way. And there are traders out there that need to reverse that position. So 134.50 for that currency pair, I think has a reasonable bias. You can also look at the Aussie against the Japanese yen. So buying any yen crosses most probably makes sense this week. So you need to pick your your currency pairs accordingly, which is why I use the momentum meter. You know, the yen crosses, buying the yen crosses, which means you buy the first currency, which is known as the base currency, and you sell the second currency in the quote, which is known as the quote currency. If you're buying the crosses, you're buying in this case the pound, and you'll be selling the yen crosses. We're having a nice, this is again This is the daily chart. Much more powerful technical analysis is on the daily. There's more traders that make up the levels you see on the daily than they do on the 1 minute chart. Clearly, you're seeing here we hit this double bottom basically end of last year, beginning of January. We've had the pullback. The pullback didn't take out the previous lows. Pullback puts in this bullish engulfing pattern. This is a really a solid indication that that the buyers are in control of this at the moment. A series of higher lows, and we are trading higher. The RBA, as I say, we're going to be hearing from them this week, but they have been pretty hawkish in their rate hiking sort of rhetoric. The really tight job numbers, the lowest employment in almost 50 years in Australia. Massive runs on CPI out there at the moment. A tight jobs market this week is going to see a continuation of Aussie strength. Aussie strength on the basket. Be careful of this, okay? And I want to make this quite clear. The main currency on the planet, as I keep talking about, is the US dollar. The US dollar is going to bully any other currency pair. Okay, any other currency, I should say. It's going to be, if the US dollar is going stronger, then all the other currencies are going to go weaker against the US dollar. Yeah. But taking the US dollar away from it, looking at the Australian dollar in comparison to its peers, other than the US dollar, picking a currency that's maybe trading to the weak side is maybe something that you might want to do. So not necessarily against the dollar, the US dollar, but against the Japanese yen, maybe even against the pound. I'll look at the pound in a minute. But this is a nice little currency pair at the moment that's got the bias we've taken through. You can see this level of the daily. This is daily, remember. Okay. Daily resistance acting and out. We're just coming into that moment. If we break through here at the moment, the way I trade these breakouts, never like to trade it with my money. I always like to trade it with other people's money. I like to trade the breakout. You'll see the retest, and then you'll be back up to this consolidation zone, I think, within no time at all at 450. Again, the risk reward bias is to the downside. The only thing that can really derail this, I would say, would be Governor Lowe to suddenly start turning bearish, dovish, unlikely, or for the unemployment rate to significantly rise in Australia, which again I think is pretty unlikely. That's the only thing I think that can maybe derail that on a fundamental basis. I don't know, of course, but I would be surprised to see any change in forward guidance out of the Bank of Japan. So that is the only fundamental risk, I would say, to buying this currency pair on the breakout higher. All right, any comments coming through? Let's have a look. We've got do drop me a chat in the chat there. I can see your chats coming in, so do drop me a chat if you want me to look at anything in particular. Okay, I alluded to the fact that you may want to be looking at the British pound. British pound, again, when you're looking at the analysis, I always go to the momentum meter. For those of you that trade TradingView, by the way, and you want to get this for absolutely free, I used to charge for it many years ago. But if you want to go to the indicators and type in momentum meter for top 8 currencies, you can get this loaded up for you there, and then you can see it. So looking here at the white line, that is the British pound. Okay, so the British pound has come over the 4-hour chart. It's being sold at the moment. Doesn't tell me for sure that the British pound is going to be continued to be sold off this week, but I am a trader that likes to do what the big players are doing. It all comes back from my days in the trading pits. Those are my jackets that I used to use when I used to stand in those futures pits many years ago. If Goldman Sachs and JP Morgan were shouting, buy them, buy them, buy them, you can bet your life I was buying them. I want to do what the big players are doing, and I'm not trying to stand in their way. At the moment, the big players are selling the British pound. British pound is under pressure. Well, if that's the case, then I want to buy a currency that's basically performing better against the British pound. One thing this also tells me is that the pound against the Japanese yen, where both are trading weaker, there must be not much of an edge in there. Yeah. So I will this tells me what's the point of me selling or getting involved in the pound yen at the moment, because both of those currencies are heading in the same direction. You know, we want to trade a currency that's going up and against the currency that's going down for trend continuation, of course. So pound is getting weaker, and the Australian dollar is getting potentially stronger. So let's have a look here at the pound against the Oz. Where is the pound Oz? It's there. Okay, so this is an interesting one as well. This is the daily chart. Now, I don't know if you trade head and shoulders patterns and pennants and so forth. Whether you do or not, whether you label them head and shoulders, that's entirely up to you. I'm not a big sort of head and shoulders pattern. Doesn't mean that trade doesn't mean they don't work, but basically, what this is telling me is that the bias is lower for this currency pair. But what it's telling me is the neckline, which would generally would be the a double or triple bottom. In this case, it's a double bottom from November last year, and again this year. That level there, 175.26, was the base of a 500 pip move before it smashed through. It smashed through beginning of February, end of January, 31st of January. It smashed through with this pin bar. Okay, this pin bar in here, that is showing me a clear rejection of that neckline, old support, now acting as resistance. Clear rejection, back up, tested it again, daily doji, indecision, we're up there again. Friday we touched it, and now we are showing respecting of that level at basically at 175. US shoots down more objects. Yeah. US shoots down. So this level of resistance at 175 has got to be your sort of level where you think, well, if I'm wrong, I'm going to get out of this trade above 175. A longer term trade, once we break through this sort of last couple of days lows, and we have retested this now, this resistance zone, I would say that the path of least resistance remains now back down to this consolidation zone at 70. So that you've got a really decent risk reward trade on here. You might even get what is it? You can just get a 4-to-1 maybe. I'm not saying you should be taking it here, but if you take a short trade on a pullback and you got your target down to there, you're basically getting that's a 2-to-1 on that basis. With 2-to-1, you have your stops above the above 75. Yeah, you get about 2-to-1. That's not 2-to-1. There we go. There you go, 3.5-to-1, something like that, on this entry with the targets down there. If you're a bit of advice, but this is just the way I play it. There's a big thing about risk reward ratios, and a lot of traders go for those big ones, 3-to-1, 4-to-1, 5-to-1 risk reward ratios. They're great when you get them. There's not many trading strategies out there that I see that give these type of 3 to 4-to-1 returns consistently. They do happen, but to trade a 3 to 4 to 5-to-1 risk reward ratio, you've got to have a certain personality. And trading, as we know, is all about psychology more than anything else. It's about psychology. And you've got to have the personality to withstand quite a few knocks before you get that runner of the 3 to 4 to 5-to-1 risk reward ratios. So if you're the type of person that doesn't like taking losses, that you find it painful and you end up getting sort of angry with yourself because you keep getting losses after losses, getting punched about. I think I did a video a couple of weeks ago on YouTube about it. If you feel uncomfortable with that, you should not be going for these long risk reward ratios. However, if you are going for them, I do believe that getting to break even on those is maybe the better thing to do reasonably soon. So once you get a 1-to-1 out of it, maybe take half off the table or something like that, and then run the other half to those big ones. I have a trading style myself. Once I get to my monthly target, which is around 4% a month, then I'll start to do something like that, go for those bigger ones, or going even into a trail. But getting those off the bat sometimes can be quite hard. But this is a nice little setup in terms of bias. I think it remains to the downside. You've got the fundamentals agreeing. You've got a dovish, reasonably dovish Bank of England talking. In fact, 2 of the 9 panel members in Bank of England don't want to move interest rates at all. Bailey is getting less hawkish now, maybe certain dovish. Australia, you've got a dovish, you've got a hawkish upward pressure on rates. You've got a hawkish low. You've got a really tight labour market. You've got inflation running off the charts there in Australia as well. China opening up, going to be inflationary as well for Australia. So the fundamentals and the technicals align with that. I love it when fundamentals align with technicals. So there you go. So there you got the dollar yen potentially trading high. You got the Aussie yen potentially trading high. You got the pound Australian potentially trading lower as well. Now, I don't trade. I'm not a big fan of this last currency pair, but it's the New Zealand dollar. And the only reason why I don't like it, I mean, even here, in fact, I mean, it's been a while since I've traded it in terms of it. But even here, I can see what this chart shows me now. I just want to have a quick look at the 4-hour chart while I'm on. Yeah. So what this chart shows me, even on the 4-hour chart, it's just lots of wicks. Okay, highs and lows. If you take away the wicks, and you just look at the line chart, that basically is the close. Well, even that looks a bit messy. And that's why I don't really like trading the New Zealand dollar. But the New Zealand dollar is at the moment pretty strong. Okay, it's a very strong currency. You look at there on the momentum meter. It is one of the stronger currencies at the moment. If you want to get involved in the New Zealand dollar, I'd say be a little bit cautious about it. But it is a strong currency at the moment. You just need wider stops when you're trading that. But in terms of a trend, this currency pair is trading down nicely. If you have your stops above, these moving averages are basically up there is a 40 moving average. So if you've got stops above the 50 moving average for the pound New Zealand, you must be doing okay. But the bias is still down, and I don't think this has got any real reason to derail from this downward bias. But bear in mind, if you're trading this, you do need to have wide stops. And if you look at the ATR in here as well, the average true range is mostly pretty high. What is the average true range in there? It's supposed to be coming in at the average true range here is coming in. Well, it's been up at 295 pips for the day. There's 160 pips, 160 pip range in a day. Think about that when you think about your stops. Even on a 4-hour chart, if you look at the 4-hour chart, you've got average true range coming in at sort of 50 pips for 4 hours. So you need to have reasonably wide stops. It's been ranging on the 4-hour. It looks as though it's going to break to the downside now, but be careful of that. Okay, folks. Well, that is my lot. That's my, gosh, it does go pretty quick. We do about 35 minutes for this. We'll be back on Wednesday. So make sure you bookmark that. Wednesday, same time. We'll be looking at how the CPI has basically affected the US dollar. Remember, whatever happens to the US dollar has ramifications to all the other currency pairs as well. Of course, we won't have seen the Australian numbers by that stage, but we'll see how the markets have played out. Will the yen continue to weaken as I expect this week? I would say we'll see. Well, we'll see that on Wednesday. As I say, my name's Andrew Lockwood. You can follow me here at the City Traders, of course. That's all my socials up there, Instagram and Twitter and all that stuff as well. But as I say, I'm the guest speaker here for the whole month of February, so looking forward to it. If you can't make Wednesday, I'll see you next Monday. If you can make Wednesday, I'll see you there. Look forward to it. Have a good couple of days. Trade safe, and don't forget your stops. See you soon. Thanks for joining.